The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this very first trading day of October the 2nd. And thank you to our hosts, and hope everyone had a great time meeting Tommy, and the rest of the gang over at the workshop that was held on Saturday morning here in the Boston area. I was unfortunately unable to go, but I would have loved to have met our Tigers, etc. But that's how it goes sometimes. We're looking at a Dow at all-time highs. We were waiting for that missing leg D. We'll get to that. Let's just go from the E-mini, which is up 3.75 at 25.1975. This is a leg E. There's no other way I'm counting this. Leg E in the Chapman methodology with an M formation in the fast-moving average, the green 9-period differential of the MACD. The histogram shrank a little bit, expanded a tad on Friday, but now it's back to shrinking a little bit, but the day's young, so we'll see what happens by the end of the day. Stochastic is under where it was at peak C, back at 25, what was that, 2506, 2507.25 on the 20th of September. And on-balance volume has had a V-shaped rebound, but hasn't quite taken out that high. Now, what's really important about this is that you can see in the weekly chart the uptrend. And this is what I show my subscribers to my opening call every single market day. I show the E-mini in the daily, the weekly, and then the 120-minute chart, because the monthly chart is usually too short a time frame. I can do it if I did the continuous contract. However, I was expecting a pop to a new high in the Dow, and then a little later in the day, start to see some weakness. And then I said by Tuesday, we might see a reversal. And this will be the very first time in quite a while that we're going to have to start looking at the short term as a reversal area. We've only got long positions. This is very interesting because we've got what I call under the radar stocks that are, or even ETFs that are kind of in a market area that is not, they're almost independent to a certain extent. So one of our stocks, and one of the areas I'm looking at, the steel stock is up almost 4% just today alone. This is a fabulous move. And even more important is that General Motors hit the 42s. I can't believe that General Motors would do that. We've been long since the 34s and the 37s, and two positions. And it's remarkable how well it's done. I think it's getting a little toppy here, but hey, it's better to be wrong to say, I think it's a little toppy and have it go high and you're long than to say you're short. So at this particular point, it suits me to say, oops, mistake. It didn't turn down today as I expected. In fact, it's up very sharply. Not the point. The point is that at this particular stage, we are trying our very best to stay long as possible. For those subscribers to my opening call who are still long the diamonds, they've had a fabulous move from the 222s to the 224.70 area right now. And I have a particular plan how we will change that if certain conditions are met today. And we'll have the same conditions probably tomorrow with maybe different numbers. And that's the way I'm looking at it. Just all our positions are long. And I'm slowly saying, now I can start to think of implementing the short side, because I think we are getting somewhat toppy. Somewhat toppy is not very toppy, it's just somewhat toppy. And we'll just have to let price dictate what we do next. So the E-mini has gone into the Chapman Wave inside up channel, inside track, repellent sell zone, hit 25.75, and now is reversed, but holding the 9-period moving average. So we'd have to just let this unfold as the day progresses. And if there would have to be a closing price on a weekly basis under 24.80. That's some 35 points, 350 Dow points away for this E-mini to give me anything that represents a peak E as a sell signal, not a sell mode, but a sell signal. and that's how I'm going to do it day by day, time frame by time frame. Daily time frame is getting somewhat toppy, hasn't given the signal yet. Now we can run these quickly. Dow. The Dow right now is up 81 at 22,486. It's testing the breakout resistance trend line right there, that green line, the Chapman wave inside track. It's gone above it, but the day is young. I want to see where it closes. I have got this as a wave 5 in the Chapman wave and a leg D. Finally got that D. And the MACD is good. That's the MACD, not the D, but the MACD, making that M formation. I'm expecting this right arch to be the failure pattern. We'll see what happens. The stochastic is very strong at 91%. And the weekly chart is going into the upper resistance dashed green trend line sell zone. Hasn't given a signal yet. And the 120-minute chart has gone to a leg D, just as the E-mini had done. And the weekly chart, the monthly chart has now said leg E has extended into October. That means you've got to wait the entire month of November before you can even get a peak confirmation. All right, here we go. So the parameters are upside. I said if there is a move, a close above 22, I can't remember offhand. I think I said 22,520s. This might be a recycle. This might have just added another dimension to the upside. Just let's wait and have patience. I do think this is where I'm starting to put my foot on the brake, lift it off the accelerator, and we'll see what happens. And then supporting the Dow, closing under 22,270 would be a signal to say, be careful. S&P extended, gone to a leg F/B, same pattern in the MACD, M formation, stochastic, same thing, on balance volume, both in the Dow and the daily. S&P is saying, hey, on balance volume is getting really extended. Watch out for some kind of a consolidation coming soon. But in the, that should be there. Sorry. In the weekly chart, this is what I did for my subscribers over the weekend. I did a whole thing on the S&P in 4 time frames. Every single time frame was bullish. The only thing was that the 120-minute chart was getting a little bit overbought. Let's see. Yeah, CD. It's an E right now. Peak E. We'll see what happens. All right. Let's go to the QQQs. Now, here's a surprise, because the QQQs led the way up, led the way down, then led the way back up, and now they're stalling. They're down 0.31 at 145.14, having hit 146.17. The all-time high is 146.59, and it's struggled. It did it twice. It was a double top, very unusual pattern. Double top, and the weekly chart is at a peak D, double top. Monthly chart is in a leg C, and 120-minute chart just went to A, B, C, D, E. I believe this is an E. So here again, the Qs are suggesting we're getting somewhat toppy. It's getting harder and harder for these Dow stocks to move higher. And that's the Googles, the Amazons, etc. This is going to be impactful, but there's a rotation going on. And for anyone who's saying that the rally is being led by fewer and fewer stocks, I beg to differ. It's led by the rotational aspect, that as the stocks that led before start to have a digestive phase, the others come on strong. And that's just what the fund managers learned from the summer of 2010. Switch over to another area as soon as you see some topping action in one of the sectors. I'll be back. We want to talk about the IBB, the SMHs, bonds, dollar, gold. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So a bunch of questions came up, and so this is what I wanted to do. I'll try to deal with it in the context of what I'm looking at. Let me just, before I go to gold and everything, I had questions about this, and it's quite important that I do it. I said on Friday that Technical Friday might continue because this is an absolutely a perfect technical to test the veracity of different systems. This is a perfect time. And what I was looking at is this Chapman Wave cup and ladle pattern that formed with a high of 22,179 in the Dow daily. Back on the 8th of August, it pulls back to 21,600. And then it goes chop, chop, chop. And I had to change my Chapman Wave 5 to just really an X with a 3 down, saying, you know what? I think this action is really good. And that breakout on the 11th was very good, which is the reason why we started looking only at the long side of the Dow diamonds from that day on. I also had mentioned that if one had a portfolio and you really want to know in the big picture, where should I be adding? That was the question. Should I be adding to my IRA or care plan or whatever plan it is? I said, yes, this is the time right now to add to it. Think of it as 2 or even 3 stages. You want to add to it now. You want to add to it if there's maybe a 2,000-point decline, and then just some crazy number you put in if there's an even deeper decline at some stage, because the monthly charts were still very positive. So now what we've got, and then the Chapman Wave cup and ladle says, when you break out in a cup formation, not a cup and handle, that doesn't stop at the left side lip, in this case 22,179, it just goes right through it. And preferably it goes right through it in a B or a C, because it says you should still go to a D. When D is complete, you could come back and retest D's breakout, in this case 22,179, but you want to ride it as long as you can. So I drawn in the rising wedge formation, a whole bunch of different techniques, Chapman Wave legs, peak C at 22,419. And I said, I thought that there would be a chance to go to a leg D, and I was stubborn about it. As much as I kept reading, and there were the moons, and there were this, whatever it is, I said, just put it aside. Just do your homework. You've done this over and over and over again for 20, 30 years using the same techniques. Stick to the technique. So thank goodness I did. Here we've got our D, and I put that rising wedge. We're above the rising wedge resistance. I've got this as a Chapman Wave 5. I haven't got a signal yet, so the 5 could still move. It's a floating ladder. It could move a little bit more to the right. but I'm thinking that it's getting really close, and a couple of reasons I'll explain why. Here's the same thing. When I said that the MACD could cross positive, and that would add fuel, momentum fuel to the fire, whereas the stochastic had given you the torque, the actual takeoff. Look what happened. MACD deflected lower last week, the 120-minute chart, and gave you that breakout, that sharp breakout in the in the daily, in the 120-minute chart. This is the daily on the left. This is the 120 on the right, and we're in leg. So we're in leg D in the 120-minute chart, and the MACD and stochastic are still very strong, and we're in leg D in the daily. I wanted to just go through that to explain to you what I'm looking at. And now look at this. This is my I love this. This is my 4 quadrants, my overview every single day. And here it is. This is D continuing up because on Friday we closed at the high. So this merely pushed it up there. So you've got, if I can grab it, there it is. So this is a D. We've broken above the resistance in the 120-minute chart. The ARMS index, Richard ARMS index, so he gives you the highs and the lows divided by the up volume, down volume, etc. This only went to 1.80 this morning, and that was after the month ending on Friday. Sometimes you get a little pop-up, either that or on a options expiration, you get a break to the downside or a push to the upside. So it's trading at 1.11. It just says, hey, you know what? There's still disbelief in the rally at this stage. There's your D in this bar chart of the Dow, and here's your bar chart of the S&P. I'm calling it leg F for now because it could still go to a G. But you know what? I could recycle this. It could turn into an F/G. Let's see how we close. The day is young. I do want to go to this and continue by looking at, get to some of the questions. So the Qs. Nice move up Thursday, Friday. Nice move up earlier in the day today, and now 2 or 3 hours into the session, it's giving back some of the gains. It's really struggling, and that's because of your Amazons. Look at Amazon here. I told you it gave me a sell signal to a sell mode in the daily, had given me a sell mode in the weekly, and it's real close to giving a sell signal in the monthly. That would be amazing if Amazon finally gives a sell signal in a monthly chart. So trading at 955, way off the 1,000 and what was it, 60 or whatever it was high. You've got Google, which I'll call Google because I don't like saying alphabet, but it is Google. Nice rally, nice push today, but it isn't. It's in an A, B. No, I'll call it a C. Yeah, Google's up at the higher end of its range. Alphabet, social media at 953. Let's call it a high-level consolidation so far. Facebook took quite a dive earlier in the week, and then spiked higher, went from the 175 high back in July down to the 161-ish low a week ago, and now it's back to 169.64. Still a high-level consolidation, but a consolidation nevertheless. Now let's do this. The SMHs, the semiconductor index. The reason why I want you to do this at the beginning of the week is I want us to know what to look for. So this is an F/C in the daily chart with a doji candle. There's an M-shaped pattern forming in the MACD. The stochastic's way below where it was at the last high of 92.90, the last peak, E/B. So I'm suspecting that we're getting real close to the semis coming in for a breather. That's all I'm going to call it at this particular point. I could see it actually accelerating much lower if certain conditions are met, and they're not being met right now. So the semiconductor index acting very well, up 37 cents at 93.70. Let's make it very simple. A close below 91 says be careful. A close below 88.70 says watch out below. We're going to go quite a bit deeper. I'll just keep it as simple as that. So now I want you to look at gold. Gold, look at that, 1278.2, down minus 6.6. But look at the daily. On the left, touch the 9-period exponential, 200-period exponential moving average. Remember, I've been talking about that for 2 weeks now. I said 1273 it was, now it's 1272 will be my target. And then we're going to assess what's going on. This is leg D to the downside. You've got an inverse V-shaped pattern in the daily. Weekly, I put a down arrow because this is very negative action. Excuse me. It's the weekly chart that is telling me this is probably a peak D, and we got more time involved in this consolidation for gold. Silver's the same thing. So gold down 6.5, 6.75. Silver is down. Let's see. Silver is silver's up 0.01 in a leg C, not a leg D, but a leg C to the downside, way below the 200-period moving average. So parameters are to look for. Gold would have to break 25 points above for me to say, okay, more than a bounce is going to be a big bounce. Silver would have to close from the 16.68 where it is now above 17.10 for me to say, silver's got more to the upside now than the down. At this point, I'm saying lower lows, lower highs. Look at high-grade copper. High-grade copper, another break. High-grade copper is at 2.95, just going nowhere. Low-level consolidation, making an arch formation, an H pattern. Not very good. Crude oil is what I wanted to look at. Crude oil right now is down 1.33 after that peak E-top that was made 3 days ago. Interesting. I'll be back. Basil Chapman, Tiger News Hour. Dow's up 94, S&P's up 5.75.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, let me just finish doing this. New parallel. It's just a little easier to do it this way. New parallel. So what we're looking at is COF. I had looked at COP by mistake, but it was really COF that the question was about. Capital One. So Capital One used to, I haven't seen it lately, but they used to do much, much better commercials than most. But sometimes, commercials are, you remember the commercial, you have no idea whose commercial it was. I think that is really the trick. So there's a W formation in the weekly chart. The daily of Capital One Financial has gone A, B. Yeah, it's still leg C. Very positive, very strong. The monthly, let's see first the weekly. Yeah, the weekly has got this lowercase h. It's actually inverted V with a successful right side test. This looks to me as if it might not be all in one swoop, but it's at 85.85 up $1.19 today. I think it's going to test the 88.29, 88.24 high of the week of 21st of July of this year. That'll be typical of the W pattern. Now, there's two kinds of W patterns. If you hear people talking about W patterns, you should really find out which one. There's a W pattern that occurs going to lows, and it has a successful test of the right side when it doesn't break the left side low. In this case, the low of the 2nd of June, week of 2nd of June at 76.05 was tested by going to 76.98 the week of the 8th of July, and then it ran up. So it didn't even break that. It was a successful test. And that says you should get now higher highs and higher lows with a push above 88.24, the high of the 21st of July. I like it. On a short-term basis, the MACD and stochastic are really good. It's got the Chapman wave squash formation between the MACD and stochastic, and that says you can go from the lowest low bar very quickly and very sharply to an A, then a B, and even a C. And then you might have to take a little time as the MACD has to take over from the torque of the stochastic as the stochastic rests a little bit, and the momentum of the MACD has to push you further ahead. Let me just double check here. I don't want to make a mistake. My eye says that that was not a top. That was a double. 83.44, 84, yeah, 84.45. Okay, that is a leg C. So that says any day now you should start to get a somewhat of a pullback, brief pullback. The XLF, look what it's done. It's in leg D right now. Most of the banks, the financials that we're looking at are in Ds. And that says we're getting close to some kind of a digestive phase in the S&P Select Financial Spider Fund, trading at $25.99, up 13 cents. But I don't see a big pullback just yet. So now let's look at bonds, because higher yields, lower bonds, it's really the story here. And the bonds are trying to rally to the 200-period moving average, 124.69 down 7, and that average is at 125.05. I think there could be a bounce to the 9-period moving average of 125.46, and then we see if another H pattern forms. But the weekly chart is, just sideways consolidation, probably slightly lower highs and slightly lower lows. That's the TLT. Let's look at crude oil. Crude oil, what did I say before? Crude oil had pulled back, after a peak E, but I haven't got a down arrow yet. I won't get it until at 50.48. I need to see it close under 49.80, and then I'm going to put a down arrow on the daily, and the weekly says up that arch pattern that we were talking about. The two fighting patterns are going to continue fighting for a while longer. So that's it. And only if crude oil breaks into the 53.30s, and it has to do it by Wednesday afternoon, Thursday morning, will I say, wow, it's recycled to the upside. But I still don't really see it as a short. So COF, and then we go back to that. I can't remember. Did I finish that? Oh, so the question was, what do I do with it? And I'm going to say to you, you can use a 120-minute chart. It's in, I don't know what it's in. This is going to be, let's call it A, B, C, D, E. A, B, C, D, E. A, B, C. Yes, you know what? I'm going to say that I don't think it's just there yet, but if you have a chance, it's 85.90. I would say, if you have no position, I would start a position under 84. You might have to wait for it, but that's kind of for safety right now. Normally, I'd say if it's breaking out like this, you don't need safety. It's only in C. But I know you're looking longer term. So I don't want you to go to C, then a peak C pullback, go to D just slightly higher, and then come back again. So I'm just saying, you might want to just wait a little bit. There are two ways of doing it. You could grab it right here at 85, 86, saying, I know this is the right price. The right price is closer to under 84, but I want to be there even if it goes higher and then comes back under it after a peak D. I want to be in it because the W pattern can become a powerful formation. The monthly chart is not that exciting when you look at it. It will be. This is just the start of the first hours of the new month. So I don't know, but the weekly chart is improving technically, and that's suggesting it is going to try to test the 88s. So I hope that helps you. All right, now I can go to questions that were sent to me. Oh, I don't know if I can get to them all. Brent, BZ at BZ. Let's see. I don't know if I even BZZ. Let's go to BZZ 17. See what happens there. Okay, BZZ 17. A, B, leg C in the weekly chart. You can't do this. You got to go back to the beginning. A, B, C, D, E pulls back. A, B, C, D, E, F, and now it's pulling back from a peak F. Yes. So Brent is also pulling back, but actually at 56.12, I see Brent holding the 55.10 to 54.80 area without breaking down. Not yet. I think it's still going to chop and try to move a little higher. So that would be the support level I'm looking at. Next question was Goldman Sachs. We haven't got into Goldman Sachs, and I said I wanted Goldman Sachs. I used my last webinar for this big move I was expecting in the fourth quarter. Here we are into the fourth quarter, and it's already broken out from the 215 area to 238. 10%. We've got stocks, fortunately, that have done better than that. But yeah, this is very nice. This is a good move. The Goldman Sachs is finally doing its thing. That means all I need to say is Goldman Sachs has tremendous support between 231 and 228. In October, a break of that level would be very negative. But right now, it's looking very good. Goldman Sachs is part of the financials, doing very well. Next question. Macy's. Haven't looked at Macy's for a while. Had a bounce the other day. Made a peak D top in the daily, going back to the sell mode in every single time frame. Poor old Macy's. As I said before, extraordinarily well-run company, just smacked down when they didn't anticipate the tremendous damage that an Amazon and some of the others online are doing. So Amazon's pulling back. People still like to go there. So A, B, C, D, E. Peak E in the 120-minute chart. I'll tell you what I'm looking at 20.60 minus 122. If Macy's, letter M, cracks the 20 support, it could gap down and go right under that 19 support. So watch out. This is not good for Macy's right now. Whoa, time is flying. We're already up 93 in the Dow, up 5.67 in the S&P, and this is another break. We'll be back. Basil Chapman, Dow's up 93, S&P's up 5.66. Just kind of stuck there. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Yes. I forgot to look at the dollar. DXY, dollar index trading up a little. Oh, trading up a lot. It's up 51 cents at 93.56. We are anticipating a leg D. We got long for my subscribers to my opening call. The day of the low, the 8th of September, we got long, but pretty good position for us. Anticipating that gold was going to keep pulling back. And I don't know what to say. That's the only way I could look at it. Oh, and then, well, my theory then was gold, silver, bonds, gold, silver, bonds, platinum, copper. So let's look at platinum here. Platinum, the euro. Yeah, whoa, look at platinum. High-grade copper, look at high-grade copper pulling back some. Today's unchanged, but it's pulled back quite sharply from 3.1, was that, 7s or something, right down to where we are. We went to hit 2.9. Now it's at 2.95. I think there's more to go to the downside. So this is what my thinking was, that yields would rally. TNX.X. And the rally in, this is the 10-year, and the 10-year is at peak C. The high today is 23.44. The high 2 days ago was 23.44. It needs one more penny up, and that starts a leg D. And that's what I said to subscribers when I sent out my triple yield chart. Let me just get out of this and I'll show you what I'm looking at. Close workspace. Save. It's a little slow because I haven't shut down for a few days. Okay. Yeah, that's a buy mode on the daily. Yeah, for sure. So now look at this. LT, this is the what I call my long-term charts. This is the weekly chart of the Dow. This is the weekly chart of the triple yield chart. That's the 30-year in white, the 10-year in brown, and the 5-year in cyan, light blue color. And this says to me that we've got to be careful because any push, I'd prefer to say a close. I'm going to say a close above the close of the week of June the 6th, was it? We'll be there in 1 second. It's a little slow today. Here it comes. There it is. So this is the chart that we're looking at right behind you. It's coming. It is slow, isn't it? So a close above this high, the high of 28th of July at 29.44, and in the case of the 10-year, it's the high of the 7th of July at 23.96, and that's the same week as the 5-year, the cyan color, the FVX, and that's a high of 19.68. If there is a close above that this week, we've changed direction. In fact, I was talking to over the weekend to a person, really probably one of the their fund is probably one of the, or their company is probably one of the leading bond companies around. And when I say around, I mean worldwide. That's what I read anyway. And he was saying, yeah, I know the Fed, they've committed themselves to do it. They're probably going to try to, they'll have probably move higher unless the jobs report is just so bad this coming week and they're kind of forced to hold off. And I mean, that's the thinking. There's nothing much you can do. The yields look to me right now as if they want to go higher. Bonds are getting to some kind of support level. We're going to watch it very closely. I'll do that with my subscribers. We are really watching these things very closely. But right now they're still in the down channel, about to touch some resistance levels. So we look at that, and if you look at wood and the iShares Global Timber and Forestry ETF weekly chart right here, had a fabulous 3 weeks of trading close to the high or making high 67.15 the week of the 27th, 67.15 the week of the 29th of September, and now we've just started off with 67.14 the first few hours of October. I think we're going to push to the upside. So far, that's very good action. And the weekly chart of the HGX has gone higher, much higher than the 287 high of the week of the 21st of July, here in the 297.86 area. So I'm just saying, I'm watching these very closely because double tops must be right at the double top, extending higher. Sometimes restarts, refigures, reconstitutes a buy mode, a buy signal to buy mode. So we're going to watch this very closely. So IYT, no one asked me about it. I'm looking at all the different questions that got sent to me in the emails. Nobody says anything. The iShares Transportation Average ETF trading at 177.22 made a new all-time high today. The high on Friday was 178.65. Today goes to 178.72. Strong red candle. And that red candle says, this is part of what I'm looking at. There's a chance that we are just at this particular moment becoming somewhat toppy. Somewhat toppy doesn't mean major sell signal or anything. I'm just saying that I've got my D. I've got my D to keep me warm. So the D in the daily Dow has been, that is what we wanted. But wait a minute, the SPX had a leg a leg E, pulls back Thursday, Friday it breaks to a new high, and today it extended that. Well, this is not the kind of pattern that you look at and say, wow, that's a horrible candle. The day's young. I need to see some candle reversal here in the S&P. Look at the NYA. This is the NYA. This is a New York Stock Exchange. Same thing. Yeah, I could call this F, but boy, you're going to have a massive pullback by Wednesday afternoon. You should be seeing the New York Stock Exchange, instead of being up 41 now at 12,249 all-time high. By Thursday, I want to see it sharply under the 12,165 9-period exponential moving average to get some kind of a sell signal. The pattern I'm looking at suggests by any means that if there is a pullback, you'll need the New York Stock Exchange price to come down. You can't have the technicals just failing. It has to all be together. And so far, the weekly chart is also saying, this is a good breakout. This is nice action. So we'll see. The next couple of days will be very important. We're not going to go short until I feel that there's something worth going short about, not just a daily pullback, and the next day we're at new highs. So I did that. JP Morgan. No, that went to the financials, but okay. JP Morgan trading in leg C. If it's in leg C, it should go to a D. That's still very bullish for the next few days. That's the way I have to look at it right now. And it's G/C in the weekly, and it's a leg C in the monthly. I've been talking about this for a while. A very powerful. All right, I'll do it. Bank of America, which we are long, hasn't made a leg D. This is very interesting. It's up 26 cents. It's not really fantastic action here over the last few days. It's stalling. So I need to see 25, I think it was 64. Let me just double check. 25, 64, 64, and today's high 63. I need to see 25.65. I don't know why I put a 68 there. 25.64. I need to see a much higher high in Bank of America to say, hey, you know what? You're recycling to the upside and not stalling at resistance. All right, we'll be back. Basil Chapman, Target Technicians Hour. What a fascinating. Oh, MDY. We'll look at MDY as soon as I return. Basil Chapman, Target Technicians Hour. Dow's up 104.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So rather than do something else, I got a question about a particular stock called TGB. This is the Seiko Mines Silver Company. It has gone from the ones to the twos, and now and then pulls back to the 167s. Now it's at 192. And the question is, can you take a look at it? Yes, certainly can, Dan. This has been his baby for I don't know how many decades, and he seems to do fantastic. Holds it, and it just skyrockets, and then gets out. So let me see. So Dan, it's got a D still to come in the weekly chart. I like it. It's in the. Did I just say it was in the silver? It's in the copper. I don't know why I said that. I meant to say it's in copper and other minerals, the Seiko Mines. Maybe I said that. Anyway, it's in copper. And the copper chart has been fantastic, and now it's pulled back quite sharply, but Seiko's holding well. I'm just going to say to you, I like it very much. I would get a little concerned at 192 if it broke under 180, if it closed under 180, because then it says it's going to try to come back to the 170, 160, whatever that is, 168 area. And that says, you know what, it could pull back deeper before it makes its leg D. I like it if I'm correct, and it's still going to go to D in both the weekly and then the monthly. I think it'll break above 204, and it's at 192. It's not such a big deal. It's 12 cents. I think it will do that, and it'll do that if by Thursday it hasn't taken out 180 support, but in fact has held well, and it looks like it could have a pop. So hold on. I don't think this is the time to get out, but I would say I would lighten up just a little bit, just for money manager purposes. If it breaks under, say, I'm going to make it 172, or close below 172, and I'll say, you know what, take a little bit off. I'm sure you're going to get a better price for that, but keep your call. So that's DGB. Okay, let me do this because we're about to run out of time. The Dow's up 108. The S&P is lagging. Dow's at 0.46. S&P's only at 0.26. I prefer the 500 to lead the 30, but the 30 is the one I watch the closest. So I'm saying to you, a couple of things happening right now. If the VIX, which is at VIX right now, is trading at 947. It hasn't gone below that 884 level. The closer it gets to 9, the greater the chance we're going to have a very strong rally. But at this particular point, I think I need personally to assess the day, the end of the day. I think I'm real close to some kind of short-term pullback. That's all I'm going to say. We'll elaborate more tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.